Hola amigos y amigas, incluyente, no sé. Pero bueno, esto es un video muy rápido de reacción, es un tema que está de moda y me parece que es bueno tal vez explicarles un poco qué es lo que está sucediendo, porque me resulta muy interesante y es una dinámica, digamos que puede romper el mercado, puede volver al 2007 y están cambiando las condiciones. Hay un drama en este momento en Wall Street, en la bolsa de Estados Unidos, por aparecer culpa de un grupo de loquitos que se reúnen en Reddit, que es una red social muy antigua, muy diferente a cómo funciona Facebook, que tumbaron unas operaciones de unos grandes fondos de inversión. Les voy a contar más o menos en qué trata el asunto. Un osito muy grande, como este, apuesta en contra de una compañía. En este caso la compañía es Gamestop. Gamestop es como Blockbuster o como Betatonio en el pasado, una compañía que fue muy grande pero que está cayendo. Entonces los grandes fondos, que están representados por este osito, decidieron invertir en contra de esa compañía para ganar dinero en la medida en que baje el valor de la acción. ¿Qué hace para ganar ese dinero? Estos ositos grandotes no tienen acciones en la compañía y le piden prestado a este gato unas acciones. Entonces, el gato le presta al oso 10 acciones a 10 pesos. El oso dice que las acciones van a bajar de precio. Y tan pronto le presta las acciones, el gato, él le vende esas 10 acciones a Hulk por 10 pesos. Y luego él está esperando que la acción baje de precio para comprarle a Hulk de vuelta esas acciones a menor precio. Si él se las vendió inmediatamente a 10 pesos y la acción baja a 5 pesos, él se la compra de vuelta, le paga 5 pesos, le devuelve las acciones originalmente a su dueño, a Doraemon, y se queda con 5 pesos. Eso multiplicado por miles y miles y miles de millones de pesos, o en este caso, millones de dólares. Al parecer, una sola compañía, Venture Capital, perdió 1.3 billones de dólares en esta operación de Gamestop. ¿Por qué perdieron eso? Porque un montón de muchachos o de gente entendió algo muy interesante, y es que el número de acciones con las que el oso, el monstruo grandote, estaba apostando eran más que el total de acciones de la empresa. La empresa tenía 100 acciones y estos decidieron apostar 140 acciones en contra. Entonces hay un déficit de acciones, hay 40 acciones que no existen en el mercado y la gente de ese foro decidió atacar por ese exceso. Entonces sucedió eso y como no existen esas acciones y estos chicos decidieron apostar a quedarse con esas acciones y no venderlas, pues el precio sube por unas características del mercado normal. Cuando hay mucha demanda y no hay oferta, pues sube el precio. Cuando la gente quiere manzanas y no hay manzanas, el precio de la manzana sube. ¿Okay? Eso pasó con estas acciones. La gente de Reddit está decidiendo quedarse con esas acciones. ¿Y cómo apuestan estas personas de Reddit en eso? Utilizando plataformas que aparentemente son segundonas. Plataformas como Webull, como Redhood y American Trade, cosas de ese estilo. Una muy importante de esas aplicaciones de teléfono es Redhood, que decidió, por circunstancias específicas, que ahora vamos a explicarles un poco, les voy a pegar un video ahora del dueño de Webull explicando por qué pasó eso, deciden no permitirle a los pequeños inversionistas, que en Estados Unidos llaman retail, comprar más acciones de 3 compañías a las que ellos estaban queriendo acceder. Entonces, porque el negocio en este momento es comprar la acción y quedarse con esa acción hasta que suba muchísimo y que pidió prestada las acciones tenga que pagarlas al costo que sea, perdiendo millones y millones de dólares. ¿Ok? De eso se trata todo este juego. Yo no soy inversor, me gusta mucho ver el mercado de divisas desde hace 10 años que estoy que sucedió la gran crisis, y esto me tiene súper interesado más que por el tema de la inversión, por el movimiento de las comunidades que están generando unas reacciones muy grandes en el sistema económico, en el sistema político. Aquí hay algo parecido a lo que pasó con TikTok, con Donald Trump. Entonces eso es súper interesante. Les voy a dejar el video ahora de el dueño de Webull, y tal vez pegue también el video Chamat, no puedo decir el apellido de él. Ok, voy a leerlo. Chamat Palihapitiya, que es uno de los grandes inversores, uno de los nuevos, para que ustedes tengan análisis. Es más o menos como el nuevo Warren Buffett. Así que ahí les dejo el video. Espero que esta explicación así muy rápida les haya servido y me cuentan. Charlamos. Chao.
There's so much going back and forth without any real facts. I think what we're seeing happening in social media, most specifically Reddit, is an echo chamber of concerns people have that have nothing to do with the financial markets and the intentions that go behind stopping a specific stock or a group of stocks from trading. It's very easy. I mean, no politician will leave any crisis to go to waste, right? Famously. So they see something trending, and now everyone's putting their own agenda on it. What's happening, and I was very angry when I got a call at about 10:58 a.m. this morning Eastern time from our clearing firm, and they informed me that they will not be able to support new opening positions in 3 stocks specifically: Gamestop, AMC, and KOSS. Now, I go after yelling.
See, this is the guy we need. This, like, the CEO of Webull here is telling us what's happening. And he's taking the side of the people. He's going, this sucks. What do you mean we can't take those trades anymore? And he's pointing the finger at the right people, the clearinghouse. Robinhood failed this one on communication. And if you, I don't know, what's difference? Why is Webull pointing the finger at Apex, but Robinhood's like, no, we decided to protect our customers. Who's right?
Screaming, this is insane. The reality is this: we need to settle those shares. If you sell a stock of GameStop, you expect to get paid for selling that share of GameStop. And when that action doesn't happen, when you sell your share of GameStop for $350 and you get zero back at settlement, that's a very big issue. Now multiply that by the billions of shares that are exchanging hands in a day for a stock like GameStop, and then you have a situation where you have complete market collapse, right? So to explain it simply, the reason why our clearing firm is not able to support clearance on those specific symbols is simple. We clear through a system called DTC. Back, 200 years ago, you would buy a stock and you would pay someone out, out in front on the Buttonwood tree, out on Wall Street, in front of where now the New York Stock Exchange sits, and you would hand that person cash, and they would give you a stock certificate, a paper stock certificate. We don't deal in stock certificates anymore because it's inefficient. We trade so much volume now, having all that paper obviously does not work. So companies like DTC were started. DTC is the go-to company. They own this business, basically. They pretty much have a monopoly. There are alternative ways to settle trades, but DTC settles more than 95% of trades that happen on the street. Now, DTC needs to maintain an orderly marketplace, meaning if you sell a share, you are going to receive payment for those shares. That's what they guarantee. And in order to guarantee that, they set collateral rates for custodians, right, or clearing firms. So typically, on a typical day, there is 2 days till settlement. You trade today, you have tomorrow, Friday, and then you have Monday. So the stock will settle on Monday. Those 2 days, meaning Friday and until the funds actually come and exchange hands, so to speak.
That sounded like that cut out on theirs. I'm going to go back 5 seconds here.
Until the funds actually come and exchange hands, so to speak, someone has to fund that trade. And the clearing firm does that. That's one of their jobs. And typically, there's a collateral of about...
Okay, so the clearing firm is basically the person holding the bag for 2 days. Got it.
Anywhere from 1% to 3%. So if you were selling a share of Apple, that clearing firm until settlement date would pay 2% of the notional value of that trade to DTC that DTC will hold as collateral until settlement happens. Now, because GameStop, AMC, and KOSS are so volatile, DTC has raised that requirement collateral rate to 100%, meaning that for every single dollar that exchanges hands in those stocks, the clearing firm has to send for deposit for 2 whole business days that exact same amount of the notional of the trade. Now, when we're talking about GameStop at $250, $350, billions of shares trading, we're talking about hundreds of billions of dollars that the clearing firm physically has to send in cash to DTCC to hold there for 2 whole business days. And to be frank, the clearing firms are not that well capitalized. They can't do that.
Well, so I mean, really, what's happening here is DTC, the company doing these exchanges, they changed the rules. So it's still Wall Street that ultimately screwed us, right? Wall Street is like, you know what? We don't want to deal with these shares anymore. That's exactly what's happening here. It's the suits up on Wall Street are like, you know what? We don't want 2% collateral on those GameStop shares. We want 100% collateral. And if that means Apex and all you other people have to shut down, that's not our problem because we're the suits and we're shutting you down. So that's what's happening here. It's what we thought. It's the suits. Now, the Webull CEO appears to be properly explaining what the hell is going on, and he's properly pointing the finger at the suits. Redhood is like, we did this to protect you. This is again where that clarity is missing. Let's keep going. This is interesting. Let's listen.
In order to stop the clearing firm from going out of business, they stop the settlement of those shares, resulting in firms like Webull not being able to allow customers to trade those stocks. Right? It's a market dynamic. And what's going to happen if DTC doesn't move that, right? So we want to blame DTC. We want to say DTC is the bad guy. They're raising requirements to 100%. Well, what happens if they don't do that? Then you have counterparty risk. So if I sold a share of GameStop to someone at $350 and that person was short and covered a short, say that person was Melvin Capital. Melvin Capital is now completely underwater. They don't have enough money to pay for that purchase to cover their short position. So now the clearing firm is going to pay on behalf of Melvin Capital. And then the clearing firm will try to collect that money from Melvin Capital down the line later on. If they don't get it, they mark it as a loss. Now,
that's not our problem. That's not our effing problem. You all set up an institution that says when we trade, you deal with all the crap in the background. It's not my problem. Wait, so literally what the Webull CEO just said is, just in case Melvin goes bankrupt, we're going to stop you all from trading. So you're literally reiterating the problem. You're reiterating the fact that Wall Street is screwing Americans. Oh, my God.
By that billions of times. Now, the clearing firm can't pay to settle those trades. So you have billions of people that sell stock that aren't able to get capital back for that sale. You have counterparty risk. That means that you have a complete market breakdown. And it's a bigger story than just GameStop. It's the whole market is not able to function.
And you were saying 2008, something like this happened, and they didn't raise the requirements, or what was that one like back then?
They were too slow to raise requirements, and we saw the trickle down effect when it started with Lehman. And
by the way, this is exactly why cryptocurrency would be freaking amazing. You don't sit around on your butt for 2 days waiting for bull crap to clear. Wow, go buy crypto. Jeez, man.
And all the hedge funds that Lehman supported became counterparty risks because Lehman was the clearing firm for those funds. And now if the clearing firm can't back the clearance of those trades, then you have a situation where you have people selling stocks that aren't able to get the money for selling those stocks. Complete market breakdown. That's why we had the government intervene and bail out all the big banks.
Okay, how does Citadel, when investors are asking me about Citadel, because in the some of these brokerages use Citadel to clear some of their trades. How does Citadel play a role in the DTC or as part of this?
They do have a play in it, absolutely. They are one of the biggest market makers on the street, and they facilitate a lot of the liquidity that we see. So we're able to buy a share without driving up the stock price 10% every time. They are what's called the street side of the trade. So there's the customer side of the trade and the street side of the trade. Citadel would be the street side of the trade. They're one half of the equation when it comes to clearing. So they're if it's not Melvin Capital on the other side, maybe it's Citadel on the side. But if a customer, if say John Doe is going to sell a share, they're selling it. They're not selling it versus Jane Doe. They're selling it versus the street. The street is usually a firm like a Citadel.
Is there an arguable statement to say Melvin Capital caused some of this because of their issue and then Citadel bails them out? Is there an argument of anything like that? Is that part of how this comes about, or would that be something that you wouldn't know?
Good question.
I mean, it's kind of speculation where it really started, but certainly Melvin Capital's collapse had a big play in this. The ability for a big firm to not be able to clear or match the other side of a trade has a trickle down effect. It then goes to the clearing firm, and then you have fears about the clearing firm not being able to settle that trade. So I think that's where it started. Yeah. Okay.
And if you wanted to right now to take shares of GME, like if you wanted to, could you? Like if you wanted to, could Webull take shares of GME?
I'm not following that. When you say take,
sorry, not take, wrong word. If Joe Blow investor in Webull wanted to buy shares of GME, could you sell them to him right now?
Oh, hold on a second.
No, we cannot, because we do not have the ability to sell proprietarily. We are simply a platform for a venue for, in your case, Joe Blow, to get access to the exchange. That's all we are. We never take the other side of the trade. We don't have the ability to take the other side of the trade.
So if I'm an investment bank, then, and I'm like and they take proprietary risk, they could take on those long trades potentially.
Yeah, I mean, potentially that would be a special trade situation where it would happen off exchange. That does happen every once in a while. If you've ever looked at a chart, you've seen like a crazy print that's completely out of whack with how the stock's trading. That's sometimes called like an off exchange, transaction. And usually that happens where it's like, T. Rowe Price wanted to, move stocks from their flagship fund to their small cap fund, and they would have an internal trade at a specific set price that would be off where the current price is. That's usually how that happens. So it's very irregular for a retail investor to ever be involved in something like that.
Okay. Luke, do you have any questions?
Let's dig into the decision with Robinhood CEO Vlad Tenev. Vlad, thank you.
Live again. I hope it's not the same stuff we just heard.
Thank you for having me. This is surreal for me. I've been watching your show a lot, especially through this past year.
Well,
wow, he didn't say that about CNBC or Bloomberg. I guess he's left.
Care about your capital commitments, your liquidity, and what was going on the regulatory side. And I'll talk to you a little bit about that. But I want you to address the obvious. This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy. Fair criticism.
That's not what it is at all. And I know you started this segment. It really resonated with me because you described the story of Robinhood. Robinhood started 5 years ago by pioneering commission-free, no-account minimum mobile investing. And we've been the spokesperson of the individual investor. And our whole goal as an institution is to enable those customers, empower them, and give them access to the markets. Because for the longest time, markets have been only accessible to the wealthy. And so the entire industry adopted our business model in 2019. And in 2020, we added millions of new customers. The entire industry added millions of new customers who took advantage of the market rally and became investors for the very first time. So, we had to make a very difficult decision to protect our customers and our firm.
Why?
But we in no way
why? Explain why you had to do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Right.
Well, I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
So why'd you do it?
Decision. Robinhood, as a brokerage, has lots of financial requirements, SEC requirements. We have to put up money at clearinghouses. The amount of money that we have to put up depends on market volatility, and we're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols. That
he's saying the same thing we've heard. He didn't answer that question. Let's quickly, is the founder of Reddit on here?
So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements. And
the SEC hasn't said you had to do this.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Yep.
Well, none of that had anything to do with our decision to do this. Again, this was just looking at regulatory requirements, financial requirements, and we 100% will always protect our customers. The entire business is operating to empower individual investors and has been since its founding. And that's what Robinhood is committed to continue to do. So we don't want to restrict buying in these 13 stocks. We're doing the best we can to re-enable it as long as it's operationally and prudent from a deposit standpoint.
So for you, it's about how much money is in the mix and what you can cover yourself?
Well, it's about us complying with the financial and clearinghouse deposits and regulations.
Then you know what you need? I'll give you some free advice. You need somebody who sets those requirements to come out and say that this is why this happened, because otherwise it smells bad, especially for a place called Robinhood, to have Citadel Securities, your largest customer, investing $2.75 billion to bail out one of the biggest losers in the GameStop short. They both deny, you and Citadel say this wasn't concerted action or anything, but it looks terrible. So you need somebody to justify your decision. Do you think you can do that?
There's a lot of misinformation out there, and I'm not going to speak for what regulators or industry professionals will say, but you can talk to any of the brokers that have made similar restrictions, and I think they'll all tell you the same thing. And this is a highly regulated industry. It's non-negotiable for us to cooperate with the regulators, follow their guidance, and we're in constant communication with them. So we have to be extremely buttoned up here.
I heard you. And I saw you on another channel. They were saying, so is it a liquidity issue? So Robinhood didn't have the money to control the flow. And you said, no, it's not the issue. We don't have a liquidity issue.
Right.
Well, if you don't have a liquidity issue, but you say you're stopping the trading because you couldn't.
That's what we said.
How does that reconcile with itself?
Yeah.
Well, we feel pretty good about the situation, and we did this preemptively. right? We were looking at the deposit requirements. We were looking at the operational requirements. So we did this proactively, and we feel good about being able to re-enable these things. And we definitely want to make sure customers understand when we impose restrictions, when we lift them. Ultimately, brokers have to impose these types of restrictions because the capital requirements can change, and we're in unprecedented times, and the financial system operates in very technical ways with regard to settlement and money movement, and there's no way around that. It's just the reality of our business.
I hear what your rationale is, but again, now we're going to be watching this story because you have political forces I've never seen aligned before who want to make sure that the big guy is not finding a way to get over on the little guy. Because the country, I think, has just about had it with that. So you're caught in the middle, and we'll be watching. And I hope you're acting in good faith and that the trading resumes and the market can settle itself. But Vlad Tenev, thank you for coming in and making the case for Robinhood.